presents exciting new opportunities for the investment-minded, but it's also volatile and accelerating in complexity. That's why we created Token Metrics, an intelligent crypto platform backed by an industry-leading combination of data, AI, and media that feeds optimized portfolios to crypto investors. Featuring Token Metrics ratings to help you find the best investment opportunities in real time, an indices page that showcases various model portfolios, and deep insights into price predictions and technical analysis. A dedicated NFT dashboard that evaluates NFT collections and assets by our machine learning algorithm to find the most profitable and secure NFTs across all available blockchains. Plus, with access to Token Metrics TV, monitor 24/7 exclusive crypto news and analysis. Whether you're a first-time trader or a seasoned crypto investor, you can stay informed and in control, backed by your all-in-one crypto companion, Token Metrics. Take control of crypto today at tokenmetrics.com.
All right. Happy Friday, everybody. Welcome to the new market update. And as you can see, we have a very special guest, an OG coming back with us. Forrest, how you been?
Doing well, Ian. How about you?
Doing well. All right, so let me
Thanks for having me on.
Absolutely. Let me just put out the alert, letting people know that we are live.
Yeah.
And definitely make sure to tell a friend. Even though in the bear market, not being crypto is still a financial crime.
That's the best time to be in crypto.
Yeah, basically buying
long term.
So, let me just post this on Discord. And be sure to follow us on Twitter. We have our handles here. I'm at Diary of a Made Man. Forrest is at 0xStacker. And also make sure to follow Token Metrics at Token Metrics Inc. And we also have our Mentimeter that we'll be putting out shortly. But very, very excited for this market update because it's a whole new month and it's the last month of the crypto. Last month of the year, right?
Let's hope not.
Yeah, that'll be bad. All right, so welcome. Let me just pull up the screen here. So as usual, we'll be having a very engaged stream. So if you can go to Menti and put in your this code. So menti.com, MENTI.com. Use the code 53836299. That's 53836299, menti.com. And in this stream, we'll be covering our predictions for Bitcoin for this month, for Ethereum for this month, and crypto in general, what coins we're looking at for the month, and then we'll answer most of your questions based on the audience vote for the AMA. So with that being said, the first thing up, or if it's easier, just scan this on your screen and it will take you directly to the Menti slides. All right, so let's do the audience welcome. So first person on the stream was Easy Eats. Hey, from North Carolina. Excited for the show.
We just landed on the moon in the Lambo.
All right. First person in the stream. Great to have you back with us. Next up, we have Crypto. Fifi. Hey, what's up? Dap Content. Pat. Hatem. Philip. Hi from Spain. Hey, what's up? I was just watching the Spain game yesterday. That was a pretty good game. Cool collab. Yes, we'll be doing more collabs. Right now, we're targeting doing about once a month collab. Dpod says Fidelity is launching crypto now. Seems bullish. Definitely is bullish. All right. Thank you, everybody. Welcome to the stream. All right, so let's hop straight into it with basically crypto market update. So let's begin first with our thoughts on where Bitcoin is going, then where Ethereum is going, and then the top coins to watch. Let's actually begin with Forrest, because Forrest is more of a trader, a technical analyst. I'm more of a long-term value investor. So Forrest, in terms of the month of December, what are your predictions for Bitcoin? Obviously not financial advice.
Sure, yeah, of course. So I'll pull up the Bitcoin chart here, and we'll throw on a couple of indicators that I like to use. So first off, we've got our easy bands. These are very similar to like Bollinger Bands, using a little bit of a different methodology, but you can see that the strategy is simply to look to accumulate Bitcoin when it's very, very oversold, or any cryptocurrency for that matter. And actually, despite making new lows, we're only a little bit oversold. We're only a little bit below our 21-week simple moving average here. So in general, if you follow a DCA strategy, personally, I would prefer to be buying or DCAing in when Bitcoin's below the 21-week simple moving average. If you follow a long-term strategy, if you're following a shorter term strategy and you're looking to get into some sort of a momentum trade, you can look for a breakout above that 21-week simple moving average and ride it up in a bull market. But for right now, this is more of a longer term viewpoint, or a longer term time to be looking at Bitcoin, because we are below the 21-week simple moving average. Now, I'll get rid of that indicator, and I will just briefly look at like RSI. RSI on the weekly can be a very, very good signal, both the top signal and a bottom signal. And we've recently printed bullish divergence on the RSI. So in the short term, that would indicate that Bitcoin may have found a bottom. And what I mean by may have found a bottom, may have found a local bottom. It doesn't necessarily mean that Bitcoin's going to rip up into a new bull market from here. In fact, I don't think that's likely at all. I actually think that we're probably in for a longer bear market, and we're just going to have to play the cycles for Bitcoin. Look for March of 2024 is the next halving. But I do think that we could get some constructive price action from Bitcoin here in the short term in December. Now, the thing with Bitcoin at the moment is I actually think that Bitcoin's one of the riskier cryptocurrencies to be in right now, which is very counterintuitive. The reason I don't love Bitcoin right as at this moment is because, and I do think it's fine. We've potentially found a local bottom. I think there's a little bit of risk in the sense that we could see a Bitcoin miner capitulation. Basically, we've got a lot of Bitcoin miners out there that are over leveraged, or they've taken on debt in order to maintain their operations. And the longer Bitcoin's price stays suppressed or down, the harder it is for them to actually be profitable. And if we actually see some of these Bitcoin mining operations go insolvent or shut down, they may have to liquidate and sell a large portion of their Bitcoin if they have any liquid Bitcoin. Again, that's being a little bit more risk averse, but it's definitely something to be aware of. So Bitcoin got some resistance at 16.8K. These are margin pressure levels, but we've actually let me move into the daily. We've actually broken above our 16.8K resistance, and the longer we hold above this and hold support on top of it, the more likely we are to be able to come up and see a retest. Now, I think a fairly strong base case here, if we move our levels over one more notch, is just to see some sideways chop within this range, right? Sideways chop within this range between our 4x short and our 5x short margin pressure level. And the reason I say that is because if we go back to our previous local high up at around 32.3K, if we go to our 24K high, that is, we see a lot of, we'll get the wick correct. We see that this 4x to 5x short range is a very popular level. In fact, I believe we spent a total of maybe 100 days in that region, about 60 days. So you see a lot of chop in this region, and we deviated above it, had the FTX collapse. But right now we're doing something very similar off of our last local high, where we're actually ranging in this 4x to 5x zone. We may look for a deviation above it, and then we just have to play the breakouts. Whoops. From a broader perspective, I am a bigger fan of Ethereum right now. I just think in the long term, Ethereum is going to outpace the gains of Bitcoin, higher Sharpe ratio, and just better overall fundamentals, in my opinion, than Bitcoin. I will throw on our margin pressure levels here and show you the key support and resistance levels that I'm paying attention to. We have strong confluence in these two levels, 1340 to 1350, and then again at 1500 or so. So I'm looking, right now we've actually recovered our range, our consolidation range that we were in for about 60 days or so before we started pumping up. What I'm looking for is hopefully a recovery of 1340 and build a building of support on top of that, which would allow us to go up and test 1500. In the short term, however, we do have a ton of resistance at 1340, 1350. From a short-term perspective, I think hedging at 1340 to 1350, maybe looking for a little bit of a short, maybe de-risking a little bit is probably a fine strategy. And then the last thing I'll say, I covered Bitcoin and Ethereum. The last thing I'll talk about is just the overall legacy market. We're actually, because this matters for crypto, and I like spending a lot of time analyzing crypto. I don't love the legacy market nearly as much as I love crypto. That's why I'm in crypto full time. But we do know that how the S&P 500 performs, how the legacy market and bond markets perform can affect risk assets like crypto. We're currently at a point in the S&P 500 that we're running up into just our linear resistance downtrend line. This is an extraordinarily good time historically to de-risk. And what I mean by de-risking, I don't mean like selling everything, selling your entire portfolio. I definitely wouldn't recommend selling your 401k if you have a long-term time horizon, right? Time in the market beats timing the market. But if there's any long positions or like short-term trades that you're in, may not be a bad time to consider taking profits on risk assets and maybe rotating them into something that's a lower risk strategy like bonds. We could definitely see a building of support on top of this downtrend line and maybe move higher, at which point you can always buy back as support on the other side. We don't necessarily have to hold and hope that we break through. We can de-risk a little bit, and if we start breaking back down again, we can get in at lower prices. Alternatively, we can buy on the back of that downtrend line. Now, I've briefly mentioned the bond market. The bond market's really, really important right now. We have our yield curve here, and I know this is a confusing chart that I won't necessarily walk through how it works fundamentally, but what you do need to understand is that when this yield curve inverts or crosses below this white line, which is our 0% level, and the yield curve goes negative, this is the 10-year yield minus the 2-year yield of U.S. Treasuries, that usually indicates a coming recession, right? And this over here is just our 10-year yield. But when you overlay these levels, right, you're going to see that the 10-year yield usually crashes following an inversion of the yield curve, right? And what you can see right now is that we're actually very, very negative right now. The yield curve has not been this inverted in a very long time. If we've only got data back to the 88 on this chart, but this is a very massive inversion. And what I would expect to happen is that this is going to pressure the Fed to start pivoting sooner. And we've already gotten our first kind of quote unquote pivot. That word Fed pivot is overused a lot. There's 3 types of pivots if we want to break it down. There's a pivot in sentiment from hawkish to dovish. That's what we got this week with Jerome Powell coming out less hawkish and more dovish than he normally is. Then you have a pivot where you go from aggressive rate hikes to lowering the pace of rate hikes. And then you have our hard pivot where we move from rate hikes to rate cuts. Okay. And what you'll see is that historically the market bottoms, the S&P 500 bottoms 6 to 12 months after a Fed pivot. And what that pivot is in that case is a hard pivot. In the meantime, however, I'm actually a little bit constructive on the market. I think this market's going to like the reduction in rate hikes. I think we can actually, it's like kind of releasing the pressure valve of these rate hikes. We could start to see the market flow up a little bit. But as we move to a point where eventually the Fed's going to have to make a hard pivot and actually start cutting rates, and I know they are saying that they're going to keep rates elevated, right? They're saying that they're going to keep rates elevated, but if something breaks and there's an indication right here that stuff is already breaking in the bond market, they may have to cut rates sooner than they want, which is not ideal. And that could send us into either a recession or some sort of stagflation. What I'm saying here is that bonds are actually looking pretty decent, right? We see historically bond yields drop. And when bond yields drop, that means the underlying premium is going up, right? So the 10-year, we would expect as we start to see an uptrend in this yield curve, we'd expect the yields on the 10 years to drop, which would mean the base premium would be increasing and you'd actually be in a very constructive asset. So the last chart I'll show is that this is simply TLT. This is a ETF for long-term treasuries. If you're looking to invest in like the 10-year, 20-year, 30-year, we're actually starting to see a capital rotation into bonds as a traditional risk-off asset, which has actually performed really, really poorly this year. All that to say, we covered Bitcoin, we covered Ethereum, we covered the legacy market. Historically, a strategy of diversification over the last 10 to 15 years hasn't been the best strategy. In fact, the best strategies over the last 10 to 15 years has been to be allocated towards risky growth stocks, tech stocks. Crypto has outperformed everything over the last 10 to 15 years, and real estate. If you've been in bonds and you've had diversification in your portfolio over the last 10 to 15 years, you've actually underperformed the market. However, we're moving into a point where recession is potentially on the table. And this is making me more bullish on a strategy of diversification. And I do think that having crypto is a very important part of that diversification strategy, as it has a higher beta, higher potential. But I'm more bullish on a diversified portfolio right now than I have been over the last several years. So we'll leave it at that.
All right, definitely great analysis for us. So I want to share this quick picture from a tweet from Alessia Rostani that's been kind of going viral, and get your thoughts on this. So basically, this says that the majority of the decline in bear markets has occurred after the Fed's pivot. So looking at this chart, basically from 1969 all the way until 2019, every time the Fed pivots, there's been basically a crash in the markets. So what do you think is going to happen, kind of looking at this? Do you think that this is going to play out again, or do you think that this time it'll be different?
So again, I'll kind of reiterate, there's like three, that word Fed pivot gets very confusing because people define it differently. So this is, as we see in this chart, this is showing when the Fed actually starts to cut rates, not just slowing the pace of rates. So I do think that the market can kind of float up a little bit, and you actually see that pattern where when the Fed kind of flattens out and just holds rates, or they start to decline the pace of rate hikes, the market still does okay. And where it actually tops out is when they start cutting rates. And usually the Fed cuts rates because something's already broken in the market. So I do think that this can play out again. But what we need to pay attention to is when the Fed actually starts cutting rates versus just slowing down the pace of rates. And right now, it looks like they could be cutting rates maybe March, April, May. They say they want to hold rates and keep them elevated for a while, but I think they're going to be forced into a harder pivot if we continue to see the bond market react the way that it does. The other thing that I'll say about this time, and I know the deadliest words you can say as an investor is this time is different. But if we look objectively at what's causing this crash in the market and what we're actually seeing, this time there are some different variables. You look at the dot-com bubble. Dot-com bubble was caused by over speculation in basically tech stocks, dot-com stocks. If you look at the real estate crash or the financial crisis of 2007, 2008, you actually see that was caused by essentially bad debt, mortgage-backed securities and whatnot. Right now, this crash, this pullback that we've seen in the market is really directly related to QE and QT. We had record quantitative easing followed by record quantitative tightening. What's drawing back the market right now is quantitative tightening. It is rate hikes. So when you actually flip the script and you reduce the rate of those rate hikes, I think in the short term, the market's actually going to like that over the next few months. And then we need to be careful about, all right, these rate hikes, what is it breaking in the market? And once we identify what it's breaking in the market and the Fed actually pivots hard, that's when we need to be careful about these 50% or 30% drawdowns that we see. So I do think that this will play out, but we do need to pay attention. And again, timing the market is tough. I do think that there's room to chop or maybe go up a little bit in the short term before we get to that.
To kind of add on to that. So let's say we enter a heavy recession next year, right? Based on everything that's happening macro, that means crypto will really have to decouple from legacy markets and be different. But when crypto has been hit heavily, when it's down 99%, then you have FTX, 3 Hours Capital, all these black swan events, do you think it's possible for crypto to decouple and bounce back that quickly during a global recession, potentially?
That is to be determined. I do think there are some pockets of crypto that we could see decouple or perform extraordinarily well. I think we'll talk about these coins in just a moment, but stuff that provides real yield and real capital generation, stuff like GMX or Gains Network, stuff where the value of the token is actually tied to cash flow, like the yield, the real yield that is generated, not Ponzi yield where it's like we saw in DeFi, where you provide liquidity or you stake a token and you get more of that exact same token, and then the sell pressure of that token causes the price to decrease. I'm talking about stuff like GMX, where when you stake it, you're actually earning platform fees. Platform is almost like a dividend stock. I think things like Ethereum could potentially draw in some investors even in a recession. Now, that being said, if we get a nasty recession, the base case for any risk asset that includes crypto is probably to the downside. And that's why I'm a big fan of diversified portfolio right now for the time being. Now, once we go back into a bull market, you're going to see me allocate 90 to 100% to risk on to crypto. I think there's potential for some decoupling. And I do think that crypto has been beat up much harder than any other risk assets out there right now. We've had black swan after black swan after black swan, and that it's brought us closer to the potential price bottom. But we also have what people are referring to as like a time bottom. Is like we can drop to these low levels. It's a matter now of how long do we have to wait for these levels to start building a base and start going back up.
All right, well said. So people are saying, great to have you guys back together again. Yeah, absolutely. Definitely looking forward to doing more of these collabs. Pat says, can you explain why ETH isn't pumping despite the ETH burn? Yeah, I think lots of macro events, crypto getting pummeled. There are lots of forces at play besides just ETH being a store of value. But I think as Forrest mentioned before, I'm still very bullish on Ethereum over Bitcoin. Still have no Bitcoin. Bitcoin to me is becoming a store of value, becoming essentially old news. But I think the way I'm viewing the market now is, what's the next Ethereum? I think Ethereum eventually will gain market share and flip Bitcoin and then become boring and stale. Now, I'm not saying it's boring and stale right now, but I'm saying down the road in terms of ROI investing, I think the returns in Ethereum will decrease. It just makes sense as it gains market share. So for those of us who want the 10x, 100x returns, you have to kind of go in riskier or lower cap plays. Not necessarily shitcoins per se, but in terms of, okay, what's next? What's the next 0 to 1 improvement for L1s? Is that maybe L2s? Is that more interoperability with Celestia, Layer 0, all these other different competitors launching? Is that through Sui, Aptos? So I think, yeah, you always have to kind of look at what's the next big narrative? What's the next potential Ethereum killer in a way that actually has some fundamentals and some potential to actually displace Ethereum? All right, so let me quickly just kind of chime in terms of our top coins to watch for this month, according to Tokenmetrics. So if we just go to Tokenmetrics and go to our ratings. So as mentioned last week, we have two new formats for our grades. We have both short-term trader grades and long-term investor grades. And our AI basically at this point in time for trading likes Pax Gold. So basically it's hedging, it's very cautious in the market. It knows there's lots of volatility. People have been losing a lot of money. Well, not everybody, but in this market with different black swan events happening. But as first mentioned, GMX is actually very, very bullish with an 88% grade on the trader grade. We have Gains Network. We have Tiltcoin, an old investment of ours back in 2017. Litecoin. I think there's been a Litecoin halving happening in the last few weeks. So I think maybe that's why it's been trending. And all these coins will be on our audience poll. So go to minty.com and tell us what coin you think will have the big month this month. And if we go straight to the investor grade, which is more long-term, there aren't that many coins with a grade over 80%. Only two really at this point, Aragon and Kusama. And I see in the last 1 week, Kusama's up about 15%. Then Anchor has a kind of decent grade, but they were hacked recently. I think last night, right? The big hack.
Yeah, that's what I heard.
I mean, that's crypto for you. I feel like crypto is it's like a Game of Thrones. If you can survive a bear market in crypto, I mean, because this bear market has been brutal versus past bear markets. Because first of all, you had rug pulls you have to avoid. You had smart contract hacks. Then you had FTX, 3 Hours Capital, crypto contagion everywhere. If you're still standing around and you still have your crypto with you, hopefully you took profits on the way up, or you cashed out on your stable coins. But if you're able to survive this market cycle, I mean, pat yourself on the back. It's okay. We're back. Okay.
There we go.
Apologies, technical issue there. But yeah, so basically, if you've been able to survive this market cycle, pat yourself on the back. All right, let's go to the next segment. All right, so coin of the month. We have 4 coins based on the TM grade, trader grade. So go to menti.com, tell us what coins you like. We have GMX, we have Litecoin, we have Pax Gold, and Gains Network. So if you had to pick one coin for the month to hold, what coin would you hold? Forrest, let's begin with you.
Yeah. All right. I'll kind of talk through all 4 of these. I'd actually say Gains Network. They have an Arbitrum launch coming up. So this one actually got 4th. Gains Network is very similar to GMX. It's a decentralized derivatives platform on Polygon, though. But they're launching. GMX has seen a big market share grab recently because they're on Arbitrum. And Arbitrum's a little bit faster, a little bit easier to use. It's really solid layer 2. Gains Network is actually launching on Arbitrum, I think this month, but sometime in the near future, if not this month. The big thing with Gains Network, though, is they actually have a competitive advantage in the space in that they have Chainlink feeds for pairs that you can trade outside of just crypto. So you actually see a lot of their volume is actually in stocks, like traditional stocks. Like you can go in and trade a synthetic version of Tesla or a synthetic version of Apple on Gains Network on leverage. As well as FX. You can trade, like, a lot of their volume is FX. So they're actually capturing a portion of the market that GMX is unable to capture because they don't offer those product offerings. So I actually think that as Gains Network launches on Arbitrum, they could actually take a bunch of market share. Now, these other options aren't bad either. So GMX, as you saw, the token metrics grade was very bullish on GMX, and I do think I'm very bullish on real yield moving forward. Pax Gold makes sense just because the AI is picking up on traditional risk off rotation that we talked about. Like I said, there's a risk off rotation into stuff like long-term bonds, Pax G, and silver. So that makes a lot of sense to me why that would be highly rated. Litecoin has a halving actually coming up in 8 months, and we've started to see Litecoin pick up. And I'll only spend a minute on this, but I'll actually share my screen here. We're entering the Goldilocks zone for holding Litecoin now. I'm not a big fan of Litecoin fundamentally and holding it long term. It actually underperforms the market. You'll see its market share dominance kind of dropping. You see it used to be like the 2nd largest cryptocurrency. Now I think it's not even in the top 10 anymore. I think it's like maybe not even in the top 20. That market dominance drops. However, as you move towards these Litecoin halvings, it pumps into the halvings, right? So the only time it actually outperforms the rest of the market is in the 8 months or so moving into the Litecoin halving, which we have coming in August of 2023. So if there's ever a time to hold Litecoin, it's in this next 6 to 8 month region that it can actually outperform the market. And then post Litecoin halving, it underperforms the market. And then of course it goes up after a Bitcoin halving in a bull market, but it actually underperforms other assets, other crypto assets. So in a bull market, holding Litecoin, yeah, you're going to do well, but there's other assets that outperform Litecoin in a bull market, in a real, bull market after the Bitcoin halving. So now's not the worst time to hold Litecoin. I will say that.
All right, thank you, Forrest. Yeah, apologies. Litecoin halving next year. So, I mean, I think Litecoin is one of those interesting crypto assets that, honestly, I think there's really been not much innovation. It was basically a fork of Bitcoin. I think ever since Charlie Lee sold the top, that was
Yep.
the time for Litecoin.
Yeah.
So I mean, I'm surprised it's still around, but it has been losing market share. But it looks like people still use it. I'm not sure exactly why. Maybe just as something different from Bitcoin. But I would. So just kind of pulling up here what we have. Let's actually begin with. Give me 1 second. So if we go to, I have all these pulled up here. So as mentioned before, TM trader grade for Litecoin is bullish. So we do think it's good as a trade, but as Forrest mentioned, I think long-term as an investment, the fundamentals are not really there, even from a technology innovation perspective. But if you want to hold it in a time like this, it has done fairly well, right? It's up 40% in the last 30 days, which is good in this kind of climate. And our signals turned bullish on it back basically end of October. So it's been trending up. So definitely worth considering as a trade. Now, would I hold it for the whole of December? That I'm not sure. Because looking at this, it is a high grade. But if we go to GMX, it has a slightly higher grade. And GMX is one of those plays that we actually like, because if we go back here and go to our market page, which basically gives you a lay of the land with the crypto market. And in the last few weeks, looking purely at sectors, the derivative sector has had the highest TM grade. So even though crypto is in a risk-off environment, in terms of what sector is performing relatively well for the climate we're in, derivatives has been it as a sector, right? It's really the big narrative, whether people are trying to short or
it seems he logged out. You can continue till he comes back.
Looks like we might have lost Ian there for a second. Stand by. There we go.
I'm not sure why that's happening, guys. But anyway, apologies. So basically, I was saying derivative sector, if you're going to look for a sector to potentially trade for the month, I think this is it. So I would focus purely on the sector and the two coins we have there. As mentioned, we have GMX, which has been performing fairly decent. The last 30 days, it's about up slightly under 20%. Our TM indicator is bullish on it as of 18th of November. And then going to, let me skip over to Gains Network. Kind of the same thing. This to me is riskier. Hasn't performed as well this month, although it's also turned bullish. But I think just purely looking at their FDV, right? It's 120 million or so FDV versus over $500 million FDV in GMX. If you go to Pax Gold, Pax Gold is really a way to just hedge the market. Really a high grade for us. Very, very bullish on it for the month. But I think this is really just being on the sidelines. Basically saying you want to be in crypto, but not have crypto exposure. You're basically getting gold exposure and just waiting for the market to just kind of turn back to risk on. But I like what Forrest mentioned about Arbitrum, because there's been lots of speculation about their airdrop. So I think if you want to do a dip and potentially play the Arbitrum airdrop, then I would basically look for Arbitrum projects. So I'd be looking at GMX. If I had to pick one coin to hold for the month, in my opinion, I would say Gains Network and GMX would be the two. Now, which one had the Arbitrum launch coming up?
Gains Network. So GMX is already on Arbitrum. So that's actually, if you're trying to qualify for an airdrop, you could make the case of, maybe buy a little GMX, maybe execute a trade or two. And this is going to take a little bit more on-chain experience and a little bit more comfort of operating on-chain. But you could, move a little bit of ETH or a little bit of USDC over to the Arbitrum chain. There's plenty of bridges to do that through. I think Synapse protocol is a pretty decent one that I've used in the past. Maybe execute one or two trades on GMX. And what that may do is it may qualify you for the Arbitrum airdrop. But Gains Network is on Polygon, having a lot of success on Polygon, and they're launching on Arbitrum soon. So I do think that it's tough because GMX, I agree, is the safer play, but the question is Gains Network going to take any market share when they move over to Arbitrum? It's unclear. I think Gains Network's the higher risk, higher reward play. If you're looking for something that's you can kind of double dip, like you said, and maybe get that Arbitrum airdrop, potentially GMX. I think both are good.
So the audience has voted, And drum rolls, the winner is GMX as the coin of the month. So looks like the audience is in agreement. All right, thank you for everybody who voted on that. Moving on to question of the day. So Sam Bankman-Fried has been going on this large media circus tour. And basically this week he had his interview with New York Times conference. Then he had the Good Morning America interview. Then he had a Twitter space that I briefly listened to, but basically consensus was it was badly and poorly hosted. So the question of the day is, do you think SBF will pay for his crimes? Tell us what you think. Also post down below in the comments. Forrest, what do you think about the whole SBF thing? Do you think it's going to pay for his crime?
Honestly, I hate to be wishy-washy because it's not interesting, but I'm 50-50. I don't know. He's acting and going around and being paraded around by the media as if he's committed no crimes. But I truly 100% believe without a shadow of a doubt that he is guilty and he has committed crimes. And even some of the stuff that he's admitted to is just very, very obvious, like, basic wire fraud claims. I don't see a way, that he's not guilty. It's just a matter of, does he have the pull and the leverage with the mainstream media and the maybe politicians and media outlets to escape and to not, I mean, like, we're seeing, it's just bizarre. It's like we're seeing Kevin O'Leary say he's ready to invest more money with this guy, which is absolutely insane. So I think this goes deeper. I think this just goes so much deeper than what we see on the surface. And I hope he pays for his crimes, but I'm not sure. It's just the way he's, walking around in the media is like, he hasn't been arrested yet. There hasn't been any, deep investigations yet, to my knowledge. So I want to say yes, but part of me says maybe he won't, unfortunately.
Yeah, I think it's pretty fascinating. I think he's playing like 4D chess or something, because that's the only way I can really understand or comprehend what he's trying to do. He's basically fired his legal team, going against their advice and just saying whatever he wants. So he must be playing some kind of long game that we don't quite frankly see at this point in time. But I do agree. I think he's definitely committed crimes, commingling user funds against terms of service. But it seems like everything has been calculated, like even moving the funds to the Bahamas, so that in terms of bankruptcy, they have to contend with the US courts for that, for jurisdiction. And then he was recently invited to speak this month at this hearing in Congress. And then as of today, the DOJ has begun a probe into the FTX bankruptcy for fraud and crime. So this is the first really government operation looking into this as a crime, which is good. But I think he's just paid off so many people. Like he's playing some kind of 4D chess. He's given lots of money to the Democrats, but even we found out a week ago, he also was giving money to Republicans, just more through dark pools, right? Basically under the radar. So basically both sides he owns. And now seeing how the media is portraying him, basically giving him fluff pieces, I think he's really doing this just public media tour to control the narrative, or to reframe the narrative publicly to the people who are not really deep in the weeds of crypto, that this was just one big accident, one big mishap. And I think that's kind of crazy. So if he's able to get away with this, I think maybe there's rumors or speculation that this is one big psyop to kill crypto, or to usher in a new stablecoin controlled by governments. Maybe this might have some truth to it, right? Because if somebody of this stature can do something so huge, losing billions of dollars, and basically just make it appear like an accident, maybe he does really control all the people in power. But anyway, let us know what you think down below in the comments. But according to this, the audience says no, they don't think SBF will pay for his crimes. Definitely very, very unfortunate. Yemi says definitely feels like a government plant. Yeah, I mean, at this point, anything is possible in crypto. In the world in general, anything is possible. But all right, so with that being said, let's move on to the next segment. All right, so we have, okay, so next up is the AMA. Now, Forrest does have a hard stop, right? I think in 10 minutes.
Yep.
All right, so go to menti.com, menti.com, use the code 53836299 to vote. Vote up on the questions you want us to answer the most. Right now we have 2 questions. So let me just make sure this is still open. Yeah. All right. So first question. With the news breaking about Telegram building a crypto exchange, are you bullish on TON? Very good question. Very good question. So let me actually pull up the article because I did find this kind of rather fascinating. So for those who don't know, kind of giving you context or I guess a timeline, Telegram TON is a layer 1 blockchain built by the Telegram team. And Pavel, I think the founder and CEO of Telegram, but then they had to basically shut down or unwind the project and make it fully open source when the SEC was investigating them, and basically kind of killed the project. But now it seems that they have come out with a way to keep the project alive. And I think if there's anybody that can do a good L1, it's definitely the Telegram team. So this is the article. Telegram is planning to build a crypto exchange and non-custodial wallets. Telegram is already a crypto platform. Everybody in crypto is on Telegram. So if they can create a non-custodial wallet built into Telegram and an exchange in crypto on Telegram, I think that will be huge for crypto adoption globally. But going back to the question, bullish on TON. Let me actually pull up TON. Do we have this on our platform? From a technology standpoint, Telegram TON is great. But I just want to see, okay, we don't have it on our platform. Let me go to Coin. I don't think it's trading anywhere at the moment. But from purely technologist, from purely tech perspective, Telegram TON is good in our opinion. But in terms of actually investing or trading in it now, yeah, I don't even know where it's trading. I'm seeing this on CoinGecko, but I'm not sure if this is the actual TON because it's been open sourced. It says this token is not associated with the open network. Kindly exercise caution. Is that what it's going by? The open.
I'm seeing one that's ranked number 27, TON.
Okay, all right, yeah, I found it. Thank you. Yeah, so looking at this, so FTV of 9 billion. That's a lot. Maybe overvalued in this market because I haven't really seen much marketing or updates with their ecosystem, and I'm not sure how many developers are actually building on this. But what do you think, Forrest, in terms of TON as a project?
Yeah, I 100% agree. I think the use case and the integration with all of with the Telegram app is very promising. But the second you open up CoinGecko and you look at the fully diluted valuation, and then even that circulating supply is low, which indicates that there's a lot of token unlocks and inflation, and I don't know if they have staking rewards or whatever it is, but there's going to be a lot of sell pressure as those tokens unlocked, especially at a $9 billion valuation. If you can sell this thing, if your tokens are unlocking and you can sell this thing at a $9 billion valuation in a bear market, that's pretty attractive. So I agree with the sentiment around the product and the fact that they seem like they have a high chance of succeeding. But the risk reward, given the circulating supply and the high fully diluted valuation, I just don't see it in this market right now. So I would personally not be investing as a long-term investment. I think right now is the time to be very, very, very picky about what your capital is in.
Yeah, because looking at this, if we just look purely at FDV for other L1s, let me sort by this, right? So TON is 9 billion FDV. We said, right? What was this? All right, let me just go back. So we have the open network. So I believe it was 9 billion. Yeah, 9 billion FTV, right? So for context, that would make it in the top 5, top 6, right? So basically, is TON similar to Polygon? I think Polygon has a lot more adoption, a lot more developers, a lot more applications being built on it. So I think Polygon, based on this and looking at their inflation, right? Most of the tokens are already out there, right? So I think Polygon, in my opinion, is a way better investment in terms of smart contract platforms. So I think right now ton is overvalued. So I think if anything, it's a wait and see approach. But thank you for that question. All right, so okay, next question for Forrest. Whilst I agree with Forrest on the security model concerns surrounding BTC, not enough is spoken about the security issues, billion-dollar hacks with Solidity. Can anything secure be built using that language? Forrest?
I would say yes. There's a lot of secure protocols built with Solidity. Yeah, I mean, look, it's a different consensus model now. It's proof of stake versus proof of work. This is it goes deep in terms of the depth of this debate. I'm more of a fan of proof of stake because I think it's far more efficient when you have Bitcoin and proof of work. You essentially have a lot of energy overhead in the network that makes it more expensive to secure the network. And you essentially have to secure the network for over a long period of time. Meanwhile, Bitcoin's rewards are halving, right? So as Bitcoin's rewards have, the price of Bitcoin basically has to double every 4 years in order to maintain that same security model. Otherwise, fees have to increase. And I don't want to go too in depth with this argument or debate because there's really good arguments on both sides. But I personally don't have any issues with the security model of Ethereum at the moment. I think, well, the one issue that I have is probably like the whole OPEC compliant thing. And it's, there's potential for it to become a little bit centralized in the short term here. But I think in the long term, we'll see Ethereum become more decentralized.
All right. Yeah, just to kind of add on to that. So I think if you're looking at investing in crypto from a security standpoint, I would rephrase that to what are the risks? Right. And when it comes to crypto, the risks everywhere. Right. So Bitcoin, what are the risks? And then what's the upside? Right. What's the return per unit of risk you're taking? So I think at this stage in time, the returns for Bitcoin do not justify holding Bitcoin. Ethereum, if anything, I think has a better justification to hold it. But I think even long term, eventually, while it's becoming great technology and getting lots of adoption, the returns will minimize. And you have to ask yourself, is it worth holding this long term or look for the next Ethereum? So that's kind of the way I'm looking at it. But I think with Ethereum going to proof of stake, as Ethereum matures, there'll always be lots of different risks. So you have smart contract risk with Solidity. I think that will get better as the ecosystem matures in terms of auditors. But I think if you're careful and very intentional with what you're investing in on the Ethereum blockchain in terms of other altcoins, basically doing your research, looking at the fundamentals of the technology, that will minimize the risk of one, being rug pulled, two, investing in a bad project that could get hacked. That's why technology is very crucial for us in terms of looking at a crypto asset to invest in long term. But also the space gets more mature. So that being said, I think definitely look at this from both a risk perspective, not just really a security standpoint. All right, so with that being said, thank you, Forrest. It was a pleasure having you on, as usual. Where can people learn more about you?
Yeah, so I also have a YouTube channel. It's called Crypto Stackers. And you can follow me on Twitter at 0xstacker. I've been focusing on putting a lot of content out on Twitter, especially like educational and research-based content. And then if you want to check out any indicators or join the Crypto Stackers Discord, join the community, cryptostackers.pro is the website. But no, Ian, it's always a pleasure. I'm looking forward to doing more of these in the future.
Yeah, that was awesome. Good to have you. Happy weekend.
Thanks.
All right. Well, that concludes the part with Forrest. I'll still be around to answer some more questions. So just go to the AMA and submit your questions. Okay, so let's see what we have here. Okay, so I remember when you gave the calls of 100x, if you hold for 10 years, that would do 100x. You came up with Matic, STX, and Helium. Asking again, what coins, if you hold for 10 years, you see doing 100x? This is a very popular question that's back. So obviously, for context, we're in a deep bear market, So don't want to lose track of that. But if we think long term, okay, the next 10 years, what crypto assets do I think will do 100x? Now, Matic and Helium did 400x returns, which was great, right? So that's what, 2 out of 3 of the coins you mentioned there. So what do I think will do 100x in 10 years? 10 years is a long time frame, but maybe let me rephrase the question. What coins do I think will 100x? That's probably a better question, right? Whether it's 3 years, 10 years, but we know it'll be a long time frame, not just like a month, because we're in a deep bear market. So let me actually go. I'm trying to see if we just go straight to current coins in the market, right? So what's going to 100x is not going to be a coin in the top 25, if not 50 market cap or FDV, because all these have already, the money's already been made in these projects. So we're going to go somewhat low cap and somewhat try to predict where the space is going. So 100x coins. Yeah, looking at the top 50, not seeing anything there. I think they can 100x. Now, I guess let's talk about one that hasn't launched yet, HiveMapper. This I've covered before. HiveMapper, for those who don't know, is similar to Helium Network. Actually, the Helium team is advising them, or the Helium CEO is an advisor for HiveMapper. It's similar to Helium, where you would just purchase a device and you just share your Wi-Fi or internet access, and you'd earn tokens. HiveMapper, same model, is drive to earn, kind of like StepN. Actually, the Solana CEO is also advising the project. They're building on Solana, but they do have an integration with Helium. But basically, it's a dashboard camera, or dash cam, rather, that you purchase. You put this in your car, and it basically maps the road. And in exchange for mapping the road via photos, videos, and all that, they pay you in a token called the Honey token. So if you're already driving, for slightly under $600, you can get paid tokens to drive, right? So to me, this is an easy no-brainer. The reason why I think this can 100x, not from buying the token, just from driving. If you're already driving anyway, might as well get paid for it. And for a very low investment of $600, similar to the Helium device, you could have a huge upside. But the upside for getting the 100x with HiveMapper is by being early. So for example, with Helium Network, if you got in, people were making a killing. I mean, I was making at the peak about $6,000 a month mining with Helium, but now it's reached to a point where the network is just very saturated. If we go to, I think it's explore.helium. Maybe let me just pull up their map. Okay, yeah. So at this point in time, we have almost 1 million hotspots. So now it's so saturated that I'm not even mining Helium anymore, because there's no money to be made in it. The money to be made was getting in early on the ground floor when there were less than 20,000, 10,000, 5,000, or 1,000 hotspots. So I think the same thing with HiveMapper. If you get in early, when they have less than 1,000, maybe even 10,000 dash cams, the rewards will be good. And then from there, you can make money. But I think once it gets saturated like Helium, the 100x returns will not be there anymore. But I know people who made a killing with Helium. I think this is going to be the same model, get in, get out. But at the same time, that's also the downside is if you're late to this with Dashcam, I mean with HiveMapper, the staking and the rewards 2 or 3 years later may not be as high, may not even justify driving and getting paid for this. But if I had to pick one crypto asset that I think could do 100x, HiveMapper for sure. I think next market cycle, this is up there. And they had this blog post basically announcing the launch of their token. This was posted November 17th. But basically, devices have began shipping, right? And they'll be airdropping 500 Honey tokens to the, so they have over 5,500 devices have been pre-ordered in 66 countries. So it's already growing. But let me find the actual image. Where's the image? Okay, it's not here. But basically, there was an image somewhere. But if you pre-order the device, at this point in time, I think it's going to ship probably sometime Q1, Q2 next year. So they are kind of behind in terms of shipping devices. I ordered mine. I ordered 2 devices in summertime, but still haven't received mine. So I think by Q1, Q2 next year, they'll be shipped. But I think this is one that could do 100x. Now, in terms of buying this on exchanges, it's going to be tough. I've done some analysis on this to our customers with a report, but I think if the FTV for this would have to be under 50 million, and the market cap would have to be under 20 million, preferably under 18 million, because about a third of the tokens will be liquid by end of the year. But with the delay of the network, I'm not sure how that's going to work out. But basically, within 6 months, a third of the tokens will be liquid. But where can this go, right? Basically, they're building a decentralized Google Maps. They want to compete with Google Maps and their API. And the valuation for Google Maps, let's say, is 3 to 5 billion, right? 5 billion as a ceiling. So from a 50 million FTV to a 5 billion FTV, that's a 100x return, right? So in terms of buying this on exchanges, when it launches, I would just wait and see. Because honestly, similar to Helium, while I made a lot of money on Helium, just mining it, I made even more money buying it on exchanges. Because when it launched, the price was, it was trading OTC. You could have bought it OTC for 10 cents or less. Then it was added on some sketchy exchange, and I was kind of cautious in terms of buying it. And it was kind of illiquid, but if I could go back and just buy a lot, I would have done that. But basically, I bought between 10, 15 cents to 25 cents, then 30 cents. Then I bought some more at about $1.50, then bought some more at about $10, and Helium went all the way to like $54. Obviously, hindsight 2020, I would have bought a lot more at $1 and at 20 cents. But back then it was still a bear market. So we're being very cautious in terms of aping into new altcoins. But I think same thing with this, you have to be patient. But I think the minimal risk, the low risk perspective is buying the device and just getting tokens for driving already. Kind of like StepN if you're already walking. But I think with StepN, while StepN did well, I didn't like how you had to have Sol and buy shoes and do all this stuff. It was just too much friction in terms of onboarding people into the ecosystem. With this, is just buy the device and that's it. You don't have to keep on spending more money to upgrade new stuff. So for me, I think this is a 100x return. Obviously not financial advice. What other crypto asset can 100x? I would say this is where it kind of gets tougher. Let me look at what we have on our watch list. I think you have to add an L1 on there that hasn't really gone parabolic yet. So basically, rephrase differently, what is the next Solana? Basically is the question, right? What is the next Solana that can 100x? So just listing different protocols we have. So very bullish on Cosmos ecosystem, primarily because lots of projects and developers are building in their ecosystem. And I think interoperability, connecting other blockchains is the next big narrative, because we have so many L1s. How do we get all of them to talk to each other? So I think an L1 in that space is going to do 100x. The question is which one, right? There's so many different L1s launching. So the ones we've been looking at in the Cosmos ecosystem is actually Canto, although I'm not sure about this long term, but definitely worth keeping an eye on. So People were asking, it's basically an EVM in the Cosmos ecosystem. It's a fair launch DeFi L1, FTV under 200 million. But the reason why is if you go to DeFi Llama, let's compare the growth of the Cosmos ecosystem, right? So I think if I'm looking for 100x, I'm going to definitely look at something in the Cosmos ecosystem. If we go to, where do I want to go? Just bear with me here as I navigate this. The categories. All right, so if we're looking at EVMs, yeah, you have Cantor right here. But actually, I want to switch to, is it overview? Where did Cosmos go? Sub protocols. Yeah, sometimes this is confusing to navigate the different categories. But here, we'll just pull up Cantor. Oscar says it's not out yet. The next 100x layer one probably. Yeah, I think so. Sometimes DeFi Lambda is always confusing me. Okay, so here I can see Cosmos, but on the other page I couldn't see Cosmos. All right, so looking at the Cosmos ecosystem. So one of the questions I got with one of our private webinars was basically if I had to pick, because this is an EVM in Cosmos, and there are lots of other EVMs and lots of other L1s in the Cosmos ecosystem, right? So you have Canto, you have Juno, you have Secret Network, you have Evmos. So Evmos is also an EVM, but the reason why I think Evmos is overvalued is if we go to, if we just compare these, Evmos, ranked 140th in market cap, with an FTV of over 600 million. And circulating supply, basically a third of the tokens are liquid or are out there. This about 40% are out there, but this has basically a third the FTV of Evmos with way more TVL, right? From a TVL perspective, not the best metric, sometimes a vanity metric, but for perspective, it's still pretty good. Points you somewhat in the right direction. Canto has about 80 million TVL versus Evmos 4 million, right? So 80 versus 4 million, and Canto is a third cheaper from an FTV perspective. So definitely worth keeping an eye on. So if I had to pick a potential 100x, maybe this, but this is super risky. And I think you could also look at the other perspective that, do we really need more EVMs? So I think that's something worth considering, because do they have any actual value besides just letting people port Ethereum dApps onto Cosmos or onto other L1s? But I think for market share, you do have to have some kind of EVM. Then I think if we had to look at other protocols, because looking at this, right? So if we go purely EVM compatible, we have Ethereum, money's already been made there. Binance Smart Chain 2 centralized. Polygon, money's already been made there. Arbitrum, they're gonna do an airdrop, but I think when they do the airdrop, I think their FTV will just be so high that the money is just in the airdrop. I don't think you can really buy that and make 100x return. Maybe down the road. Avalanche, money was getting into the private sale or early on. Optimism, it launched way too high of a valuation. So out of these, I'm saying Canto as potential. Aurora, we like it, but tokenomics were not good, and FTV was high when it launched. Moonbeam worth looking into. Let me actually see where Moonbeam is at currently. There's lots of Moonbeam is bridging dApps from Polkadot and Cosmos together, right? Our team was down in Cosmoverse in Colombia, and lots of developers in the Cosmo ecosystem were using Moonbeam to connect to Polkadot. So definitely worth keeping an eye on Moonbeam. FTV slightly over 400 million. All right, so if we go to non-EVM, right? So Tron, definitely, this TVL I would not take seriously. Solana, so as mentioned before, the question is, what's the next Solana? Not really seeing anything here. I think we have Aptos, but it's a VC coin launched with too high of a valuation. Nothing really here. Now, so going through the L1s we have on our list. So I mentioned Cosmos. Definitely keeping an eye on Mina Protocol. It's a light L1, very efficient. We had an interview with their founder and CEO, I think over 2 years ago on our channel on YouTube. Then Harmony. I mean, maybe Harmony. If we go to token metrics, our long-term investor grade likes Harmony. So I think that's one worth keeping an eye on. And they did pretty well in the last bull run. If we switch here to investor grade, yeah, so Harmony has a grade of 78%. So this is, so in terms of L1s that I think could have potential, and they had some growth, right? They had some developers building on their blockchain, and I think next market cycle they could do even better. Great technology. One of the founders left and founded what is now, I believe, is it Celestia or Layer Zero? Don't quote me on that, but some other blockchain. But I think Harmony definitely worth keeping an eye on. Then other L1s. So one we're keeping an eye on is Say Network. It's basically a DeFi protocol or L1. Multicoin is backing it, but with these VC projects, typically they launch with huge valuations. So not so sure about that, because they could have good technology, but similar to ICP. For those who don't know what happened with ICP, it was pretty good technology, but the valuation matters. It has to be undervalued for you to really do a 100x return on it. Because if we go to the historical price for this, and it's down 90% in the last 1 year. Basically, it was a VC coin launched at $363, and now it's trading at basically $4. So that's not how you make a 100x. That's the exact opposite. So you want to find great technology that has traction, has growth, but is undervalued. For example, I mentioned Canto. Canto has TVL of 80 million versus Evmos, which has 4 million, and it's a third the FTV of Evmos. So from a purely data perspective, Canto is undervalued. So you want to do analysis like that. Now let's say we also want to go into L2s. So basically like Arbitrum, Optimism. If we go to that ecosystem, actually, so looking at this, right? Arbitrum definitely has the advantage, but the token is not going to do well, in my opinion. But if we can look at what applications on Arbitrum are doing well, right? We have GMX once again, right? We mentioned this was our coin of the month, so maybe worth looking into this as a potential non-L1 play. And relative to the entire sector, So if we go to derivatives, the category in CoinGecko, and looking at FDV, right? We have DYDX, FDV of 1.8 billion, GMX 700 million, synthetics basically 500 million, right? But if we compare the actual category, derivatives, from a TVL perspective, GMX has a lot more TVL than DYDX. Then we have Gains Network here on Polygon, 25 million TVL. So if you want a super risky play, I think GMX, maybe Gains Network. This one, I would want to do a deeper dive on the technology. This might seem more like a cyclical, more like a bull market play or trade. But GMX seems to have a lot of adoption with 500 million TVL and with a much cheaper FTV versus DYDX. And if the thesis is that derivatives is going to be a huge space long term, maybe GMX could. So could they do 100x from here? So 7 billion. I think this is definitely more of a 10-year play. But if we're looking for something short term, not so much. And anything else, I think could 100x. Actually, we had, was it Lira Finance? I think this was, but options hasn't done too well. Yeah, so just kind of recap, we had Hive Mapper. I think that one, because it's launching very, very low, and you have the device. Then I talked about the Cosmos ecosystem. We talked about Canto. Talked about L1's Harmony, I think potentially. I talked about Mina Protocol. Talked about Say Network, GMX, Gains Network. Those are the ones on the list. But that being said, let me know what you guys think. What do you think could do 100x down below? But definitely hope that helps. Okay, all right. Next question. We've had DeFi, DGen gambling for APY, but what's your opinion on the next narrative, RealFi? That's crypto projects that have real world impact that people use daily. Where do you see this being built? RealFi, okay, that's actually the first time I've heard this. I think I've heard real world something, there's some other acronym, but I think it's the same thing. I think for the real world to start using crypto, they don't have to know it's crypto. I think that's how it starts. You do have to get the incentives right, but they don't have to know they're actually using crypto. Crypto becomes more like the plumbing. And I don't think we're there yet. I'm trying to see has there been any kind of the app that uses that, where I think maybe Axie Infinity could have been the first one, but that kind of pumped and dumped. But lots of people were just playing the game and then getting paid tokens. So what do I see this being built? Currently in terms of, definitely not on Ethereum, probably more on L2s, to be honest, just based on scalability. But what L2 can support this without people knowing it's being built? I think that's why you're seeing lots of adoption when it comes to Polygon and Arbitrum. And I think maybe even Avalanche. Avalanche, their niche, when I was at the conference in Barcelona, Spain last year, there are lots of gaming projects building on Avalanche. So I think Avalanche and subnets are worth looking into. So I could see that being a use case where maybe a game is built and nobody knows it's running on the blockchain. So I would say Polygon, Arbitrum, Avalanche, Optimism are the L1s where I see that being built. Solana as well, but I think Solana is going to get wrecked. Well, it's already down a lot with the whole FTX collapse, right? Down 70% month to date in the last 1 month. Then you have FTX Alameda owning about 10% of the supply. And if they have to, if they become forced sellers, that's additional selling pressure. So I think it's going to be a rough time for Solana. I think it could bounce back next market cycle, and maybe that's the next 100x again, right? But who knows? I think they're going to go through a cruel winter. So in terms of your question, that's where I would see them being built. But the next narrative for RealFi, it varies. So I mentioned before, the narrative. So I look at narratives by going to the market page on Token Metrics and just seeing what's trending, because crypto has been about narratives. So if you look at all the last big run-ups in crypto, there was a narrative. We had DeFi summer that basically began with Yearn Finance, Uniswap, SushiSwap, all those food farming tokens. Then you also had NFT, right? You had Bored Apes, CryptoPunks, EtherRocks. Then you had DeFi 2.0 as a narrative with Olympus DAO and Ohm token, and basically protocol owned liquidity. Then, so all these narratives have happened, but looking at this right now, the narrative is derivatives. So I mean, maybe that's the real world use case. Maybe because there's some other protocols that have stocks and trading and all that. But then you also had, with the NFTs, you had Axie Infinity, basically kind of gaming. You always have this large wins that make people focus on a sector and then ape in. Right? So with NFTs, you had Bored Apes doing very well. People making a killing with it. You had Axie Infinity doing like 1000x. Then people looking for the next Axie. So for RealFi, you have to have a big win, and I don't think we have that yet. Okay. All right, let's move on to the next question. Telcoin seems to be back in an up phase, given they have partnered with the bank and set up in Nebraska, and also making push into the EU currently. What do you think? Telcoin surprisingly has fared well. It was a 2018 project. I was an investor in it. I got out after like a year or two, but like a 10x return. Then the bear market happened, but then they did pretty well the last few years from a returns perspective, and they helped, one of the team members helped pass regulation that was pro crypto. And looking at this, it's up almost 100% in the last 30 days. So it's been doing pretty well. And our TM trader grade turned bullish, basically bullish. So October 31st at 0.002 cents, and it's currently at 0.003. So it's doing pretty well. So not bad. I mean, long-term perspective, not so much. Still in the buy zone, but for trading it, now's a pretty good time to trade. If we go to the resistance and support levels, looking at this, where could this go? Yeah, it's kind of hard to trade this, honestly. Just give me 1 second here. Yeah, we're working on fixing the charts in terms of making this easier for you to kind of just hover over and find what you're looking for. But I mean, looking at this, it's a pretty good trade right now, and fundamentals have been improving. Trading volume hopefully could be better than this, but as a trade, it's not a bad trade based on everything I'm looking at. Could we get better tutorial on how to use the Token Metrics grade system to make money with it? Could we ask for an update of the existing videos? It seems to be unclear how to use them effectively. Yeah, I mean, I can do a quick rundown on how to make money using Token Metrics. So let's begin at the top. So I begin with the market page. You go to Analytics, Market, and the reason why, this tells you whether or not we're in a bear market or bull market. So looking at this, me actually zoom out. The reason why I like this, while not perfect, it's not meant to be 100% perfect. It's meant to be close to, it's meant to give you a signal of where the state of the market is, whether it's time for risk on, risk off. So for example, the top was last year in November, and this is when it turned bearish, November 16th, when crypto market cap was around 2.8 trillion. So basically, once this goes bearish, it means risk off. Any risky assets you have to reassess them as to why you're holding them. So once it turns bearish, to me, that means either one, take profits, lock in profits. So for me, I locked in my profits actually earlier than this. My biggest month for selling was in September. So kind of around here, this first signal. Basically, Helium did a 400x, Matic did a 400x, and a bunch of other wins. So began taking profits. Now, some people are very aggressive and sell everything and completely get out of crypto. Sometimes you want to do that. Maybe that's whatever, but whatever tangible reasons you have for investing in crypto, you want to start taking cash off the table, because once it goes bearish, risk off. And then you look at your portfolio and say, okay, do I have anything here that's super risky that is not worth holding in a risk off environment? So maybe you're doing DeFi degen plays. When it goes bearish, risk off, that's time to get out of it. So this gives me the way to play the market. If it's bullish, I can be more aggressive. If it's bearish, I'm more conservative with my investments. So maybe I do one degen play when it's bullish, but you also realize sometimes there are false positives. But the thing is, it's not about being right all the time. It's about being able to self-correct very quickly when you're wrong. That matters more. So for instance, right now we're in a risk-off environment. So I'm playing it very conservative. Basically, took profits. Then you add on the DCG and all these other black swan events, and I'm being very, very cautious. So all this is cautious. Then I like to look at this. When it's red, basically when a bear market, risk off. When it's green, risk on. And then we have this chart, basically Bitcoin versus altcoin season. So when it's Bitcoin season, it's risk off. When it's altcoin season, risk on. So notice here, what I like to look at is when the trend changes, when basically Bitcoin season bottoms. So looking at this, Bitcoin season bottomed and then we went up. And once we officially enter the white space and leave Bitcoin season, we're heading towards altcoin season. And this is really a good time to kind of be in tune with the market and keep tabs on the market and maybe trade the market. So same thing here. And looking at this, Bitcoin season bottomed here and we've been trending upwards. So things are somewhat getting kind of bullish. We're not officially in the white space yet and not officially in altcoin season, but for me, these are two big indicators. So basically I come here, is it risk on, risk off? Basically, do I have to be aggressive or conservative with my investments? Then is it Bitcoin season, altcoin season? Then last, what sector or what narrative is big right now? So right now, the big narrative is derivatives. So we have GMX, which is doing well. We have Gains Network. But let's say it's DeFi summer, right? It'll be DeFi. Let's say it's Web3. Let's say it's some other, let's say it's NFTs. So the big narrative, you'll find that by looking at that sector as a whole, how high the TM grade is for that sector and the returns or the gainers in that sector. So this is kind of where I developed my strategy for how to trade or invest in the market at this stage in time. So that's the first part. Then the next part on how to make money, right? So you come here, you go to ratings under analytics. And if you're trading and we're in a risk-off environment, you're probably going to be a lot more conservative with your trades. So looking at this, it's telling me, okay, Pax Gold is the best trade based on our data and our AI. That tells me, okay, Pax Gold is basically getting out of crypto and hedging. So maybe worth looking into if the market crashes, if Bitcoin, Ethereum, everything goes down, maybe as opposed to holding stable coins, have some Pax Gold exposure. So looking at this, both, let me actually, if we add this filter to look just purely at bullish trading signals, so both the technical analysis and the TM grade is bullish. So we have Pax Gold. in a bear market, I want to add a liquidity filter as well. You don't want to be left in an illiquid asset. So looking at this, these are the coins I would look at to trade. So we have Pax Gold, High Finance, Litecoin, Dash, and I would only look at grades 80% or higher. So I'd keep it simple. So this basically is my watch list for trading. So basically I would either just go in and trade based off of this, based on TM grade being over 80% and the trading signal being bullish, or maybe I would also do my own technical analysis, but I'm not really a TA guy. I'm more of a just token metrics guy. But I would come in, for example, Pax Gold is one example. So here we have the signal turn bullish at 1707, 85% on the 8th of November. And I'll look at the returns. So in this market, it's held up pretty well. So if anything, it's a good store of value, more so than Bitcoin and ETH. And looking at this, basically the TM trader grade is comprised of technical analysis and quantitative metrics. So that's one way I would look at to make money. The other way would be, what do you have in your portfolio and how do you protect yourself? When's a good time to buy or sell? Right now, we're in a risk-off environment. So I'll show you how token metrics help people avoid getting wrecked. So if we look at Luna, for instance, it's going to be Terra Luna Classic. Because in a risk-off environment, you want to know when to get out. So the market page gives you that, but also the individual signals here also give you an idea of when to get out. So for instance, our grade was bullish on Luna at February 26th at $78.50. Had a TM grade of 86%. Then right before the crash, it turned, let me actually zoom in here to make it easier. So basically it turned bearish at $81.95 when the TM grade dropped to 33%. So at that point in time, you either take profits and keep a moon bag for the long term, or you fully sell everything. If you're trading it, fully get out. That's what I would do. And this was in April. And basically this would have saved you a lot of money, right? So basically the crash happened the following month, where it dropped to $1, right? So case study one, TM grade signal help people avoid taking an L on Luna. The other one was, we had what, FTX, FTT. I believe the same thing happened. Okay, at this point in time, not enough liquidity because it's crashed, but we still have history. If we can, are you kidding me? Because of this, it's not showing the TM grade. We should still have the historical TM grade. I'm not sure why that's happening. Okay, we'll have to talk to our team about that. But basically, right prior to, okay, so we do have the grade here, actually. We don't have the signals on here, but let me switch to the last 3 months. So basically, TM grade was low, then it began going up. And basically, if I zoom in here, TM grade began dropping at 22. So November 7th, TM grade turned to 21% at $22. The next day, FTT went to $5. So basically, if you're following our, so basically, how can you, one, make money? But right now, we're in a risk-off environment, you want to preserve capital. So I would add all the tokens in your portfolio into token metrics and just follow them based on the TM grade. And when you see it drop under 80%, it's basically time to get out. So like this sharp drop, like this was in a fast-moving market, this drop tells you basically at $22, get out. Then you basically had one day to get out. So we're working on creating better automated email alerts and Telegram alerts for the bot. So stay tuned. But basically, that's how you use the platform. Let me just check the comments to see what people are saying. People are saying Dogecoin is RealFi. So, I mean, that's one way I would use I would use tokenomics to make money. Now, the indices did get wrecked, unfortunately, because they couldn't adapt so fast with the whole market when FTX was crashing. But let's say because even though they were in stable coins, the main downside is using the market indicator, they turned, basically, there was just false positive. Basically, when it turned bullish, it went into the markets, and then the whole collapse happened. Then it went back to being bearish. It was able to correct quickly, but at that point, it was too late. People had lost money because the market dropped like 40% or so in some alts. But that's how I would use it. So quick recap, I would begin with market page to let me know whether it's risk on, risk off. Then I would go to the ratings page to find out what to invest in or trade. Now, let me actually talk about the new investor grade. So if we go to the investor grade, this is similar to trader grade, but it's for long-term investing. So right now, these are the coins our AI likes, or our platform likes. So we have Aragon, Kusama. So this helps me create a watch list of crypto assets to study. Now, I'm not going to invest in them just based purely off of this, but it's a good starting point. And it shows me where to go. And then we had also mentioned, based on this, the derivatives sector is doing very, very well, relative to all the other sectors. And GMX is the top gainer, and GMX has a high trader grade. So to me, that tells me maybe that this is the coin to trade this month. Then I'd want to look at this and see, okay, has this bottomed or topped, or are there any fundamental events that are making it go up? Doing more research on the community, the ecosystem. So tokenomics, the way I view it is, we try to help you find the needle in a haystack in terms of insights. So we gather all these different data points and try to abstract it and help you focus in on what you actually have to focus, as opposed to having to sift through all that data. Because lots of platforms just give you a data dump. But how do you actually find those insights that needle in a haystack? And we're trying to give you that by, like, insight number one, GMX and derivatives as a sector this month is hot. Insight number two, Pax Gold, worth looking into. Maybe you don't want to be exposed to USDC or Tether, because who knows, maybe they'll also have their own issues this month with the rumors going out there. So all these are different insights it's giving you in terms of where to focus your attention. So I hope that that helps. I think we kind of answered this. Okay, many coins are being launched for short-term profits. Helium Network, Solana, Terra Luna, and other coins are being built for the long term. Ethereum, Cardano, Cosmos. Does the bear market change your timescales outlook on coins? Yes, I mean, because bear market is risk off. So as a value investor, this is actually the best time to invest, because you can find incredible value. You can find deep value, coins that have great fundamentals, great technology, at a steep discount. So for perspective, let me actually see if I can pull up Matic as an example on tokenomics. But because it sounds very simple, but you want to buy low, sell high. And by definition, the best time to buy low is in a bear market, because that's when prices will be the lowest, the cheapest. You want to buy when people are forced sellers, and then you want to sell to people who think it's going to the moon and beyond. Right? So basically, when people are forced sellers and they think it's the end of the world, it's all going to crash and burn, you get better prices. Then you take those same assets and you sell them in a bull run when people think it's going to the moon and beyond. So The example I wanted to go through is Matic. And actually look at this using the signals we have. If this will load. Okay, yeah, there we go. All right, so basically looking at this, you could have purchased Matic for under a penny. May 9th, 2019, 0.003 cents. You could have bought Matic. Just think about that. That was a bear market. Then Matic all-time high. Not sure why that's not showing, but basically all-time high was almost 270, 286. Think about that. Buying for 0.003 cents and selling for 280, basically. Obviously, that nobody would have held that perfectly, but would have been close enough. Using the signals, right? You basically had a year to accumulate Matic before it took off. Just look at this, right? You had all of 2019, all of 2020, and then boom, it took off. So same thing is happening. Like this was when Matic was undervalued. But the reason why we knew it was a great play was lots of developers was building on Matic. We had 2 blockchain engineers working with us at that time. And they weren't typically we just give them products to do reviews on, and that's it. But after doing the reviews, they began actually building their own dApps on Matic. And I began thinking, wow, okay, this is different. Out of the 100 projects we give them, they're done building on them. That's when we knew Matic was undervalued because developers loved it. And then they're still growing in a bear market. They're doing great with biz dev partnerships. Just their ecosystem was growing, and eventually the market caught up. The market is typically behind, and once it caught up, 400x returns on your money, $1,000 to 400 grand. So that can be done in this market. Same thing. Basically, now is a time to build a list of crypto projects that have great fundamentals and technology. And then next data point you look at is it undervalued relative to the market? And can it do a 10x or 100x next market cycle? And then you want to see, is there consistent growth in their ecosystem? Are developers building on it? Are the numbers going up? Are active users going up? So for example, going back to what I mentioned before, GMX is doing pretty well. So maybe this is a potential play, maybe even long-term, right? Because that's mentioned on, where was I? Basically TVL-wise for derivatives, compared to DYDX, it seems to, right? DYDX is on Ethereum, they're migrating over to Cosmos. GMX is on Arbitrum and Avalanche, and it's doing pretty well. But the whole derivatives sector seems to be doing pretty well right now. So I think if you kind of go with that perspective, you could find those projects, right? But going back to your question, timescales, yeah, bear market, you have to think long term with the bear market, because as mentioned here, this was a 2-year time frame. Really, right? Less than 2 years, but 2 years before you began seeing any parabolic moves. So really, it's a time to accumulate, do your research. Sure, you'll have some big wins here and there, maybe an airdrop or a nice trade, but bear market is risk off. Be conservative. Think long term. Think what do you want to hold for the next market cycle, and be patient. If you're seeing consistent growth, be patient and hold, and just stake. Like with Matic, like I would just stake. Then whenever I would go into my staking part of their website, I would just see like 6 figures just accumulated out of nowhere, right? And lots of other people were doing the same thing, because once this went up, the staking returns were incredible. Because let's say you're accumulating lots of Matic through staking, and that went to like almost $3. That was a lot of Matic, a lot of money made. So same exact mindset. All right, what time is it? Okay, maybe let's give it 10 more minutes, and then we can wrap up. Okay, what do you think of the optimism token from tokenomics point of view? Is it overvalued? Yes, optimism is overvalued. Great technology, but from a deep value investing perspective, as we mentioned, overvalued. And I will show you why. If we go to optimism on here, so you have an FDV of 4.7 billion with a market cap of under 240 million. So, I'll put differently, you take the market cap, you divide by the FDV. That's not what I wanted. Let's do that again. Only 5% of the tokens are liquid. So that means 95% of the tokens have yet to hit the market. That's an incredible amount of selling pressure. That's inflation, basically. That's huge inflation. So while it's good to technology, it's overvalued. It's one of those typical VC projects that has what I call Ponzi-nomics, right? They have a very low float or supply that's liquid to make the price pump up a lot. So while it's good, I don't really see how it's going to do well when you have 95% of the supply that's going to be introduced as selling pressure. Now, maybe you can investigate the vesting schedule or the emission schedule. Let's see if we actually have this here. So, yeah, but simply because of that, to me, this is a wait and see approach. Put it on your watch list, trade it maybe based on technicals, but as a long-term investment, I don't see how it's going to do well with bad tokenomics. Right, so, and if we go to, let me see. Yeah, definitely smash the like button, subscribe, share this video with a friend, helps spread the word that I'm back doing live streams. So if we go to, is it under categories? Actually, no, let's do chains. And we go to EVM. Right, so looking at the competition, so we have Ethereum, of course, number one. Binance Smart Chain, centralized. I would ignore that. Polygon, 1 billion. Arbitrum, almost 1 billion. Avalanche, 850 million. Optimism, basically 500 million. Phantom, slightly under 500 million in terms of TVL. Now, let's compare all these different projects from a valuation perspective. Right, so we have Optimism. Right, 5% of the tokens are liquid with almost slightly under $5 billion valuation. Now, so let's compare. Let's say Arbitrum isn't launched yet, but let's say Avalanche, for example. See, let's do smart contract. If we go to smart contract sectors and we go to FTV, we sort by FTV. Right, so you have all these different competitors. So the question is, do you want to invest in Optimism at slightly under 5 billion FTV, knowing that 95% of the supply has yet to hit the market? Or do you want to invest in these other L1s? And maybe even some other L1s that are undervalued, that have better tokenomics. So maybe some of these, like Juno is on our list, but I think even their tokenomics weren't ideal. But Harmony, right? Obviously, Harmony is not anywhere. I'm sorry. Harmony is an L1, 200 million FDV with pretty much most of the tokens already liquid, already trading out there. So it has a very low inflation schedule. So if we take these numbers here, %93 of the tokens are already out there in the market. So only 7% versus 95%. And then you have what, 4.7 billion FDV versus 200 million. So if you say what, 4.7 divided by 0.2. So Harmony has to do a 23x to catch up to Optimism. Now, obviously, you also have to look at the actual ecosystem growth and the on-chain data. But I think if both are equal, this has deep value versus Optimism. Optimism could be the better technology, but I just think right now it's way overvalued based on the inflation, because the returns for Optimism have to justify the 95% of tokens that have to hit the market, that huge inflation schedule. And I don't think the returns justify that. That's why it's overvalued in my book. All right, let me check the comments. Okay, we're doing good. Were you aware that HiveMapper works off of the Helium network? Technically, it does not. Technically, it's built on Solana, but there's an integration with Helium network where they do some kind of, there are leveragings part of the Helium network, but it's built on Solana. Because if you go to, where is this going to be? Maybe the documentation. Solana. Right, so why did HiveMapper choose Solana? Then it says, when deciding on blockchain solution, the HiveMapper network sought something with high throughput. So basically, scalability. Now, if we search for, even Helium is changing to Solana. So if we go here, yeah, so basically as a HiveMapper dashcam drives around, it connects with Helium hotspots deployed in the area and records the location of the Helium access points. This creates a list of access points the dashcam can then compare to the GNSS positioning of the device. So it's kind of maybe used for like some kind of mapping, kind of like how you can map using Wi-Fi devices or hotspots based on what they are. I use that for geolocation, I think. But anyway, so Helium is used for that perspective, but it's built on Solana. All right, Icon ICX never really came back this cycle, but with the deployment of BTP interoperability, do you think they could come back and compete with DOT and Atom? Now, honestly, I don't think so. Now, I don't know much about BTP on interoperability, but all I know is they did not hit their the last all-time high this cycle. So if you go to ICX, right? Now, it was a great 100x investment. People made money on it, myself included. But if you go to the all-time high was 5 years ago, $13.16. Back in 2018, we had one of the biggest bull runs of life last bull cycle, basically from all these projects doing very well. And they cannot surpass their last all-time high. That's embarrassing, honestly. For an L1, that tells me the market has voted, they're either, the tech is not good, the competition has gotten fiercer, there's no on-chain growth or developer growth in the ecosystem. So basically it was a VC, VCs kind of pumped it, essentially. But looking at the metrics, I don't see how they've not done well. Right, but basically it just means there's been no growth relative to the market, because comparing, it's basically it's an interoperability play. Now the market gets mature every year. So Icon launched. Then after that, you had Polkadot launch, you had Cosmos launch, you have all these other interoperability plays with better technology from a just purely technology standpoint, and have more developer growth. So when you factor that in, why is Icon going to do well next market cycle? Because next market cycle, there'll be even better competition. Now you have other products launching, from whether you have Celestia, you have Layer 0, right? You have basically these Layer 0 protocols launching, these base layers. So technology is getting better, more advanced. And if they're launching, because people in crypto have shiny object syndrome, they always want the next best thing, the next big narrative. And very rarely do they go back to the old narrative, because once you made your money, you're out. So why would people go to an old narrative unless there's a fundamental catalyst that changes it, or there's growth in their ecosystem and developers? And looking at all the different developer reports, I've not seen that with Icon. So until that changes, I don't really see how it's gonna do well next market cycle. Maybe as a trade, but I'm more bullish on Polkadot and Cosmos ecosystems. All right, with that being said, this concludes this live stream. We'll have this live stream every Friday at 12 p.m. Eastern time. Thank you, everybody. Definitely share this live stream with your friends, in Telegram groups. Subscribe, turn on notifications on alerts, and hope you all have a good weekend. And as we like to say,
We just landed on the moon and the lamb ball.
the moon is not the limit to the moon and beyond. Thank you, Crypto family.